Welcome back to 5 Minute Smart. Today, we are analyzing a breaking economic shock that has sent shockwaves through global financial markets. The U.S. Consumer Price Index numbers for May 2026 have just been released, and the inflation data is a disaster.
That is right, Liam. Headline inflation has spiked to 4.2% year over year, up from 3.8% in April. This sudden acceleration is forcing Wall Street to completely abandon the soft landing narrative.
It is a massive turnaround. The primary driver behind this sudden spike is energy. The ongoing geopolitical conflict involving Iran has pushed crude oil and gasoline prices to dangerous levels over the past few weeks.
Exactly, Liam. Energy costs are rising sharply, and this is beginning to spill over into other critical sectors like transportation, retail, and warehousing. Core inflation is also staying stubborn at 2.9%.
This places the Federal Reserve in an incredibly difficult position. They are trapped in a monetary policy deadlock.
Indeed, while the Fed is not expected to hike interest rates at the immediate June meeting, the probability of rate hikes later this year is rising. They cannot cut rates with inflation moving away from their 2% target.
Raising rates further would crush economic growth, but doing nothing could ignite a secondary inflationary wave. It is a nightmare scenario for Chairman Powell.
Yes, investors are already adjusting their portfolios. Bond yields are spiking, and tech stocks have faced heavy selling pressure as the market prices in a higher-for-longer rate environment.
It is a critical moment for every investor. Alice, it is time for our signature segment. What is the smart-sounding sentence for today?
The smart-sounding sentence for today is, "The resurgence of headline inflation driven by energy volatility, coupled with sticky core metrics, exacerbates the Federal Reserve's monetary policy trilemma, where combating inflation threatens to precipitate a severe credit contraction."
A severe credit contraction. That describes the exact risk the Fed faces if they are forced to hike rates again to fight this energy-driven inflation.
Yes, it is a very delicate balancing act, and the margin for error is virtually zero.
Well, to our listeners, do you think the Fed will be forced to raise interest rates this year? Let us know in the comments. Please hit the subscribe button to stay ahead of these macro shifts. If you find our research valuable, consider supporting us through our Ko-Fi link in the description.
Stay smart, stay ahead.
I am Liam.
And I am Alice.
We will see you tomorrow.